Our next guest is one of the most influential investors in the world of crypto. Chris Dixon is a general partner in Andreessen Horowitz. He leads the firm's crypto arm with $7.6 billion under management. Notable investments include Coinbase, Uniswap, Solana, which is up big now, and OpenSea. This week, he's out with a new book. It is titled, right here, Read, Write, Own, Building the Next Era of the Internet. Chris, I want to thank you for joining us.
Thank you for having me, Andrew. Thank you.
There's about a million questions I have, and I want to get to the book and talk about the book. But before we hit the book, I just want to understand, I think we're all trying to understand what's just happened with the SEC and this Bitcoin ETF and what it means, not just for Bitcoin, but potentially for the Solanas of the world and everything else.
Yeah. So, I think crypto has been a technology that's controversial, and I think any institutional acceptance like the ETF is a good thing, is a net positive. That said, I'm very focused on, and our firm is very focused on investing in entrepreneurs building new utilities, new applications that are used by hundreds of millions and eventually billions of people. So less focus on financial instruments. But I think it's a net positive.
You separate the idea of crypto money crypto, versus like utility crypto, if you will.
Yeah.
And how much of a future you think money crypto really has?
Well, I think payments, DeFi, Bitcoin, these are all important applications. I view blockchains as an expansive technology. It's a new way to build internet services. Those services can be games, they can be social networks, they can be financial services. And so the financial part is important, but I think in a lot of ways it's been overplayed in the discussions. And so one of the things I try to do in my book is describe all of the different expansive use cases for the technology.
So Solana is one of those that actually has a big use case. It's like Ethereum.
Yeah.
A, I'm curious if you think that turns into its own ETF, but B, where you think it really goes.
Yeah, I mean, the specific ETFs, I think that'll play out for a long time. I think there's some discussion of the Ethereum ETF. I mean, I think this technology is inevitable. I think this is the future of the internet. So I think over time you will see greater and greater acceptance of ETFs and other kinds of financial instruments. So, But I think that will take time, and our focus is on investing in early stage entrepreneurs, and we see a lot of innovation.
ETF would never be something you'd look at. It's too far down the road.
For us, no, yeah, we're generally early stage investors, and so we're really looking. We're meeting with entrepreneurs. They have a lot of really interesting ideas. We think this is a really interesting new technology for building new internet services, and so that's kind of our focus. But
can I ask you, talking about investing in early entrepreneurs and different ideas that are coming out of crypto. One big idea, or seemed like a big idea, was NFTs. You own OpenSea.
Yeah.
There, it was the hottest thing in the world. Everybody wanted to get themselves a chimp, a monkey, if you remember. And now nobody wants a chimp or a monkey. Maybe you think that they do. What happens to that? This idea of tokenizing art?
Yeah. Well, I think that's been the sort of death of NFTs has been exaggerated. So last year there were $8.7 billion, 2023, $8.7 billion in sales of NFTs. And remember, this is a technology that was standardized and basically invented in 2020. So it's a very early technology. And I think like a lot of technologies, you go through these kind of boom bust cycles. And the other thing I would say is that a lot of people think about NFTs as sort of avatars. In fact, it's a very expansive technology. So, for example, you can use NFTs. We see a lot of musicians using NFTs to sell digital merchandise to their audiences and create new income streams to supplement streaming, which doesn't pay them very well. Right. We see people using NFTs for new social networks, and the advantage there is in existing social networks, you're locked in, and if you build an audience, you can't leave, and if they change the algorithm, you're stuck with it. And social networks built using NFTs, the users have the power to leave. So it's a very broad technology. I think we've only scratched the surface, and I think it's got a long way to go, and we're very excited about it.
I have a separate question around crypto, which is a lot of people look at crypto and think there's no regulation to all of this. And not only is there very little regulation, I mean, we still don't have meaningful regulation, that the venture capitalist community is not effectively properly regulating the business insofar as looking at the investments in the right way, doing diligence and the like. I've made the argument, I'm curious if you agree or disagree with this. I said to people, especially this is after the FTX of it all, which, by the way, it looks now, if you're a creditor of FTX, you're going to get all your money and possibly more, which is so interesting. Partially on the back of Solana, something you've invested in. But I said, look, most venture capitalists are buying, 10, 20, 30 investments. They expect, 10 or 20 of them to go to zero. How they get to zero is almost beside the point. And so the kind of diligence that somehow the public is expecting from the venture world is not matched with reality. Do you agree with that?
No, I mean, look, we take the regulatory and policy aspects of this area very seriously. We have a significant policy team. We've been publishing and articles on policy and calling for greater regulatory clarity for a long time. I personally go to DC a lot, so we take this stuff very seriously. We were not investors in FTX for those reasons. That we did see red flags, and we've been involved with Coinbase for many years. Coinbase is a very heavily regulated business. They Bank Secrecy Act, KYC, since the beginning. So like we take this stuff very seriously. Yes, it's true that venture capital is risky, and we do lose money in a lot of investments. But we're based in the U.S. and we take U.S. regulation very, very seriously, and we're strong advocates for more guardrails around the technology.
We've been talking a lot about AI. You write in your book about AI and tokenization and the need for that, especially when it comes to this idea of deep fakes. We just saw this deep fake of Taylor Swift that was taken down, but after 50 some odd million people saw it last week. What does that mean long term?
Yeah, so I'm very excited about AI. Obviously, our firm invests in a lot of AI. It's a very powerful new technology. Take something like deepfakes, that's going to become it's going to be increasingly common. And you're also going to see, very advanced phishing, very advanced counterfeit people. It's going to be very hard to tell on the internet what's real and what isn't. I believe, and I write in the book, that blockchains are an important countermeasure to that. So, for example, a blockchain creates an immutable audit trail. So you can have an immutable audit trail of this video that says this video came from CNBC. It came from the New York Times.
Should that be required for any of the social media?
I think that's a policy approach that should really be looked at. So I think in the ideal world,
meaning from the U.S. government.
Yeah, I think it would probably have to come. I think it would have to be.
Nobody's going to voluntarily.
I think it's hard to get a lot of different parties to coordinate without some kind of government action. I think the right way to do that is to have some kind of provenance. You have a record of where did this video come from? Is it real? And then on social networks you have some enforcement, so they don't show those fake videos. This is going to become an increasingly important issue, and we need to think about it now. How to counter those things, because we don't want an internet awash with fake people and phishing and deepfakes. This is a real problem. We may already have it. Yeah.